I'm going to discuss in this video the latest developments in a possible trade war started by President Trump between the United States and its two largest importers of U.S. products and services, Canada and Mexico. Before addressing that topic, the S&P 500 started today in positive territory but only stayed there briefly. That index is currently down about 43 points as of 9:15 a.m. today, February 25th, 2025, which is when I last looked at it. I attributed the brief rise to a decline in interest rates. The 10-year Treasury yield is currently down 11 basis points to about 4.3%, a very favorable trend for my portfolio given its heavy weighting in bonds. The decline in the 10-year Treasury yield over the past few days is caused, in my opinion, by flight to safety as investors become more concerned about what Trump may do on tariffs. It is not due to a decline in inflation expectations. The 5-year break-even inflation rate closed at 2.53% on January 31st, 2025, at 2.61% yesterday and is currently trading near 2.63%. So inflation expectations over the next 5 years has been going up as the 10-year Treasury yield comes down. Last night, I watched an interview with Canada's Foreign Minister, Melanie Joly, Joly, if I mispronounced it, that can be found at the CBC YouTube channel. CBC stands for the Canadian Broadcasting Corporation. She was in London. As with many YouTube channels that discuss the Ukrainian war, most comments appear to originate from anonymous Russian trolls or those that are sympathetic with Russia, who then like each other's comments. I was thinking about that interview when I woke up too early this morning. Joly was responding to comments made by President Trump yesterday that the 25% tariffs on U.S. imports from Canada and Mexico will go forward on March 4th. Using the signals sent by stock and bond prices so far, U.S. investors still believe that Trump is bluffing in an effort to see how many concessions Canada will make on trade without the U.S. actually starting a trade war, which would hurt both economies and place inflationary pressures in both economies. This belief is summed up by the claim that Trump is all bark and no bite when it comes to starting a broad-based trade war. And that trade war that he is threatening to start is primarily with our former allies, the Western democracies. What struck me about the interview was when Joly mentioned that she had been in Europe for several days trying to drum up a united front in response to Trump's tariff threats. And I asked myself, why would Canada's government be trying to do that unless it recognized that Trump would most likely start a trade war unless deterred by a united front consisting of the United States' former allies among Western democracies? Joly struck a defiant stance in this interview. She claimed that Canada was doing everything it could do to protect its borders from the net inflow of immigrants and fentanyl from the United States. If Trump proceeds with the 25% tariffs on Canadian exports, that action has absolutely nothing to do with illegal immigration or fentanyl being transported across the U.S.-Canadian border. which is what he claims to be interested in. Trump has been stating over and over again the real reason for starting a trade war with Canada, but U.S. investors find it difficult to comprehend that those are his reasons and consequently do not give them any credence. Trump has made it clear to anyone listening that he would like to destroy Canada's manufacturing sectors to provide automobile parts, aluminum, steel, and other products used in the U.S. manufacturing processes, and to replace that production with newly built factories and facilities in the United States employing U.S. workers. He has repeatedly stated that the U.S. does not need Canada and that every product exported by Canadian companies to the United States could be replaced by internal U.S. production. U.S. President further claims that Canada is taking advantage of the U.S. in trading, pointing out the trade deficit without mentioning, of course, that without Canadian exports of energy products, Canada would have a trade deficit with the U.S. Canada's exports of crude are the main reason that it has a trade surplus with the United States. And that crude is used in Midwestern refineries, I should say refineries located in the Midwest. The price of gasoline in the Midwest will move higher when and if Trump levies the tariff taxes on Canadian crude. If that is his real objective, to gut Canadian manufacturing, and I strongly suspect that is based on his past rhetoric, then there is nothing that Canada can do regarding the border issues that would stop Trump tariff taxes on Canadian imports to the United States, exports, I should say, to the United States. The only possible response would be for Canada to retaliate when and if Trump imposes those tariffs, as they have already said that they would do. And as the largest importer of U.S. product and services, by increasing its tariffs on U.S. exports by the same percentage in dollar amounts as the U.S. tariffs, that will impact U.S. companies negatively, and all the tariffs, both the Canadian and the U.S. tariffs, will cause inflation to rise in both countries. It is obvious that Trump has no intention of abiding with any U.S. trade agreement with Mexico and Canada, including the one that he negotiated and signed in 2018. Trump even claimed that the person who was responsible for the current trade agreement with Canada and Mexico had negotiated a bad deal, as if there was someone other than Trump who did that last agreement. And at the time, he lauded it as an agreement that was favorable to the United States when he signed it. I watched interviews with several prominent Canadians, primarily those that were former members of the Canadian government who felt free to talk about this issue, and frankly, and they made the obvious point that no trade treaty negotiated with Trump is worth the paper it is written on, and that has already proven to be the case. He doesn't want to even abide by the agreement that he negotiated with Canada. Another issue that I think is upsetting investors, as I've explained in my last video on the stagflation issue, is that companies who sell products to U.S. consumers are guiding down revenue and earnings guidance for 2025, or at least many of them are. Today, Home Depot joined that list by guiding same-store sales growth in 2025 to just 1%, with the consensus prior to that guidance at 1.7% growth in same-store sales. And Home Depot projected adjusted EPS for 2025 will decline by 2% to $15.24 per share, with the analyst consensus at $15.65 per share. So that kind of downtrend is reflecting, I think, in major part the uh, too many consumers being basically financially stressed out by the inflation that they've already experienced over the last 4 years, and they are becoming more concerned, as reflected in the consumer sentiment surveys, about keeping their jobs or even having their jobs within the next few years. So those kind of conditions can coalesce into lower consumer spending and lower GDP growth than the consensus currently expects in the United States for 2025.